Has Plug Power gone from an overhyped clean energy stock to one that you can actually invest in now? We'll talk about that and more on today's show. What is going on, investors? Hopefully, you guys are doing well out there. It is time to talk about Plug Power, ticker symbol Plug. The company reported their Q3 earnings, and we'll get into them. We'll take a look at the revenues, take a look at the growth rate on this one. We'll take a look at the expenses. We'll see how Plug Power is scaling up. And now what I think is maybe the most important part of the show, because some of you might have made your mind up about Plug Power a long time ago. It's a stock you want to be in, okay? I get it, but what you have to understand is look over the last year on this stock. Back in January, this was a $75 stock, and now the stock is down here at $18, literally 4 months later, and now the stock is trading closer to $40 per share. So you are either up huge or down huge on this stock. It is incredibly volatile, incredibly speculative type stock. You have to understand the technical analysis, okay? I don't care if you're buy and hold and hope, or a day trader, you have to understand the technical price chart of Plug Power if you want to get into this stock for any number of reasons. So we'll talk about it from a technical perspective as well. Now we'll jump into these earnings. The Q3 earnings came in. They basically missed on the top and the bottom. The revenue came in at $143.9 million. That is 34% revenue growth year over year. Now, 34% revenue growth seems okay. $143 million worth of revenue on a stock with a $23 billion, no, not a $2.3 billion valuation, a $23 billion valuation, making only $143 million worth of revenue, not profitable, which I'll show you here in a second, and growing at only 34.5%. I tell you what, there's 11.5% short interest on the stock, and all of them are standing up and plotting as we run through the financial analysis of this one, because this stock, from a fundamental perspective, just on these top line numbers, doesn't make any sense. And I'll be honest with you, as me as an individual investor, if I was going through this stock, I would click close window and move to the next one. This is not fast enough growth. This is not nearly high enough revenue when we factor in this valuation. Now, maybe Plug Power's got some miracles that it's working on to help bolster up this revenue. One of the ways I think they're going to do it is they're going to do acquisitions, and they just completed one. They acquired Frames Group to boost their engineering process and system integration capabilities. Now, this company is headquartered in Netherlands and has about 300 employees, largely located in Europe and India. Now, the company, Plug Power, paid about 85 million euro in cash for this company and about 30 million euro in earnouts potentially over the next, we'll call it maybe a year or two, depending on the contract that they have with that acquisition. So they are bolting on an acquisition. We'll see in upcoming quarters. That is not represented in the financials we have here, but maybe potentially in Q1, maybe Q2, we'll start seeing those numbers hit the tape over at Plug Power. What we've got here is our statement of operations, which is essentially profit and loss over at Plug Power. We've got our net revenue here. We've got our 3 months ended. This is our most recent quarter in the left-hand column. Right-hand column is last year on a quarterly basis. Now, because this is Q3, we get a 9-month view on the two right-hand columns, 2020 over 2021. We've got our net revenue coming in here at that $143.9 million. Again, that's up in the mid-30s over last year, where we were about $107 million. For the last 9 months, you went from about $215 million up to $340 million worth of revenue. We'll give Plug Power credit for another maybe $150 million worth of revenue next quarter. That means this company is doing barely $500 million worth of revenue in an entire year, and you got a $23.5 billion market cap on this one. If that doesn't make any sense, hang with me. I'm going to show you even more insanity. Take a look at our cost of revenue. Okay, this is just the cost associated with this revenue. This does not include research and development. This does not include back office, executive, selling, general administrative fees as well. Okay, this is a separate cost, which we'll talk about here in a second. What I want to show you is here's our revenue of sales of fuel cell systems and related infrastructure. That revenue came in at about $116 million. The cost of that revenue is $90 million. All good, right? That seems fine, okay? Fine margins. I'm not familiar with that business, but I'd have to say those are probably semi-decent margins on something like this. Look at everything else though. Service performed on fuel cell systems. That cost us $18.7 million, and we only earned $6.6 million from that. Take a look at power purchase agreements. We have $31.2 million worth of those, and we only, and I say only, generated $9.3 million worth of that. Look at last year on a quarterly basis. You spent $14.7 million on power purchase agreements, and you only earned $6.6 million on that. Here's fuel delivered to customers, $27.9 million worth of cost. And look what the fuel revenue brought in, only $11.556 million. Every time I post a video on Plug Power, I get several comments about how Walmart is a customer, Amazon is a customer. All these people are buying their fuel from Plug Power. Hello. Would you actually buy fuel for less than what it cost you? Breaking news. Every single one of you would. And let's be honest with you, the idiots at Plug Power are willing to sell it to you. Sure, Walmart and Amazon will absolutely buy it for less than what it cost. Again, I want to highlight this. Fuel delivered to customers, we spent $27.8 million to make $11 million. Does that make any sense? Here's the other thing that doesn't make any sense, and this has always been the case with Plug Power. We have negative gross margins over here. We're not talking about positive gross margins or gross margins. We're talking about negative gross margins. So off $143 million worth of revenue, you had $175 million worth of costs. That's right. Before we pay any of our staff, research and development, selling, general administratives, we spent $175 million on making this $143 million worth of revenue. That means we have a negative $31 million gross loss. You rarely see this, and you rarely see this on companies that are valued at $23.5 billion. If people weren't pumping and hyping this stock would be probably bankrupt, if not a penny stock, because these numbers make absolutely no sense. And you see that it has not gotten any better, okay? Despite the 30% revenue growth, we actually grew our gross loss. It's actually so hard to say because I'm not used to seeing companies this bad. Now take a look at this. We have other expenses here as well. Research and development came in at 16.6. Last year it was at 7.3. Take a look at our selling, general, administrative. It went from 17.2 up to $42 million. That gives us total operating expenses at $67 million. Last year was just 25. We've more than doubled our operating expenses. So we take this $31 million loss and we add another $67 million worth of cost. That gives us an operating loss in the most recent quarter at nearly $100 million. Off of $143 million worth of revenue, this company lost $99 million. Last quarter, on a quarterly basis last year, you lost $54 million. And you see for the last 9 months, it's not getting any better. You went from $106 million up to $236 million worth of losses over the last 9 months. If I wasn't recording a video, I would close all these tabs and go find another stock to invest in, because this is absolute garbage of a stock, period. Okay, take a look at the dilution as well. Last year, you had 371 million outstanding shares. Now you bolted on 200 million more for 574 million shares and change over at Plug Power. This is just an absolute disaster. Now, the balance sheet shows you that, look, this company is actually doing pretty good, okay? They got about $3.3 billion. You wonder where they got that from. Well, I guess it's probably from selling shares to speculative investors that I don't think understand what they're investing in here. Certainly, most of you probably haven't even ever pulled up these numbers. And if you did, and you decided to invest in Plug Power, you're absolutely insane, bonkers. I would probably suggest going and finding a financial advisor and allowing them to manage your money if you thought this company made a good investment. Now, from a cash flow perspective, paints an even worse story. Take a look at this. We get to add back in stock-based compensation, which more than tripled over the last year. You went from 9.2 million in stock-based compensation. Well, the executives, man, they got to have a better Rolex. They got to have the better Mercedes this year. They tripled their stock-based compensation despite more than doubling the net loss that they printed to the bottom line. Last year, they lost $112 million. Now they lost $267 million, and they tripled what they gave themselves in terms of stock-based compensation. The only people that are ever ever going to get rich off a stock like this are the short sellers and the executives over at Plug Power, because boy, they are rewarding themselves very handsomely. Now, even when we get to add back in stuff like that, we still lost. Net cash provided by the operating activities is a negative $348 million. That's more than double where we were last year. We lost $156 million running the business last year. Where are they financing this? Yes, you guessed it. Proceed from public and private offerings, net of transaction costs. Well, I forgot to say, investment banks are going to make a fortune off this company as well. That's why you see investment banks like Morgan Stanley and some of these guys, they pump this stock up because look, they know this stock has to raise tons and tons of money. In fact, over the last 9 months, they've raised $3.5 billion. Guess what? That is Morgan Stanley, JP Morgan's, all the investment banks. This is their bread and butter right here, is raising money for absolutely disastrous companies like this. So when JP Morgan or whoever is rating this stock comes out and say, hey, we like it, we like their upside. No, they just want the stock price to remain high because they know these executives are going to continue to dilute you to absolute stone cold oblivion, and they are going to raise more money, and that means those investment banks that are, quote, rating this stock are going to make more too, okay? Those are the only people that are going to make money off of this stock, and you have a lot of cash sitting on the balance sheet, which I think could eventually be beneficial to shareholders, especially if these acquisitions work out in these companies that Plug Power is buying. But look, this is an absolute massive amount of dilution that you're seeing over the last year over at Plug Power. Those financials are a disaster. If you have ever gone through those financials and decided to buy Plug Power, I would check your pulse as an investor. Those are as bad as it gets. Now, if this was a $2 stock, a $3 stock, I can understand this. If it had like a $200 million valuation, or maybe even $2.3 billion valuation, some of that would make a little sense. We could dream down into the future, okay? Hopes and dreams are not an investing strategy, okay? And what people are investing in here, I have literally no idea, at a $23 billion valuation. Now, throw all of that out the window. Okay, because from a technical perspective, believe it or not, we are breaking out, and this one looks like potentially it wants to go higher. Now, if it fails at this $40 level, I want to note that this stock right now is trading about $39. We are recording this during the regular session, but it is after we've reported earnings. People have digested this news. The stock's hanging out here at about $40 per share. I wouldn't really be concerned. If you bought this stock lower than that, wouldn't really be concerned. The first area of concern is if we do pull back to about this $34 level. You notice that acted as resistance in the past when we sideways consolidated after our massive decline on this one. I'd be a little concerned we got down here at about $34 per share, because if you break that, you're probably coming back down to maybe potentially $24 per share. It also will show you that this shorter term uptrend that we're in, I mean, just over the last month or so, stock's gone from about $24 up to this about $40 per share. That would show if we get down below about $34 per share, this leg of this uptrend has basically broken down. This trend is broken and we're likely headed lower. Now, I tell you what, this trend's intact though, okay? This trend is going up, and I tell you what, you got a lot of candles up here, but it's not a lot of sideways candles. It's either straight up or straight down. And so this stock, I think, could continue to walk up if the momentum stays on its side. It's able to kind of pump and dump kind of what they're doing. Now, expect Plug Power, as this stock continues to walk up, what are they going to do? They're going to sell more shares. They're going to raise more money because the executives know that they need it. Just in the last 9 months, they burned through $348 million worth of cash. Now, I did show you that they do still have about $3.3 billion, but this is a company that just did an 80 million euro acquisition that might balloon to about 110 million euros. So they're going to continue to be aggressive on this business. Maybe eventually these numbers that we looked at start to make a little sense. These margins turn positive. I tell you what, if you like Plug Power, you like the story, I would wait until these margins turn around. And look, we could bring up stock charts of like Tesla and stuff like that. You didn't have to be early in Tesla. You could have bought Tesla like a year ago and be up like, 1,000% on the stock, like literally, okay? You didn't have to buy Tesla back in 2011, okay? You could have bought Tesla last year and it'd been one of the most amazing investments you did in your entire life. So the same thing kind of holds true with Plug Power. I don't think there's going to be any reward to be early here. in the shorter term, technically, this is looking good. If this $40 level holds and we can start moving higher, we really need to get above about $43, $44 for this uptrend to continue higher. That would be very bullish on the stock. And I would bet on this stock going higher. But if we get rejected somewhere in here and we start pulling back to this $34 level, well, again, I say short term, technically that is broken down. We can pull down here. I personally wouldn't touch this stock at the valuation it's in, but there are some areas of support down here at $24 per share and certainly back down at $18 per share. If for some reason you're comfortable with this valuation and the financials at this company, well, that's where you could potentially buy it. But the higher this stock goes, guess who's going to pile into this one? The smart money that is going to short this, that's looking at the exact same financials I am, and they know the game that these investment banks are playing, okay? They are helping pump this stock up because they know they generate a ton of fees off this $3.5 billion raise and about $340 million last year and some other types of fundraising that Plug Power did last year. That was Plug Power. Let me know down in the comments what you think. We'll talk to you again soon. Good luck with your investments.